Welcome back for another episode of Newbie Investing. For those who are new, welcome. For those of you who have been sticking it with me, welcome back. We get straight into it. Last week I did a video of the different platforms that you can use to invest. We're all about investing, you already know that. We're not about day trading. If you're looking for day trading tips, you can look elsewhere. If you're here for long-term investment, thanks for being here. Okay, so platforms is what we spoke about last week. This week we're going to be looking at picking stocks. How do I pick stocks? That might be the question you're asking yourself. So you want to take it to the next level. Alright, so just a quick forward look for what we're going to be discussing. We're going to be looking at some of the ways you can find stocks. I might do a little demonstration, or I will do a demonstration for you as well to see how I usually find companies and find information about the companies. Okay, so let's get straight into it. First question you might want to ask yourself is, how much money do I have to invest? Okay, that's more a personal question, so you have to be the one to decide how much money you have available. And an easy way to find out really is by looking at your budget. For me, when I started out, I started with £50 and I just bought one stock. I think the first one I bought was Fitbit. I bought it because I felt like it was cheap at the time anyway. It wasn't a bad buy, it wasn't a bad pick. Fitbit, I owned a Fitbit personally. I was already familiar with what Fitbit is because I've been hearing about it for years. So that's a really simple way you can start off. Just stick with something you already know. Probably an example we'd look into today would probably be Starbucks, because I think a lot of people are already familiar with the Starbucks business model. And it doesn't get much easier than a Starbucks or Fitbit or an Apple. So you want to establish, like I said before, the fact that you have a steady income stream, because that's really important so that you're not then forced into a situation where you have to pull your stocks prematurely or pull your investments from the stock market prematurely before they've matured. Okay, because the most important thing when you're investing is about how much time you can afford to put your money into the market, because you usually tend to see bigger rewards over time. So things don't just happen overnight. It's an overtime process. You've already decided how much money you want to put in. As a good place to start, like I said before, start with something really small. That's something I always reiterate. Start with a small amount of money that you can afford to lose. Never really try to go too much in depth to cause yourself more pain than is really necessary. What stock should you pick? Choose a sector that you already know and understand. Everyone already has a perception about something. So, as I mentioned before, Starbucks, everyone knows what Starbucks does, sells coffee at the most basic level. We won't go too much into all the details about what Starbucks does, but we already know. We have a perception, an idea about Starbucks. In the US, in the UK, wherever you go, almost anywhere you go in the world, in what they call the developed parts of the world, you'd find a Starbucks somewhere. So that's a good starting point. What do you already know? You might be able to get input from family members about what they think about that particular company. That's just a good way to get immediate feedback. You might just stand outside Starbucks for a few minutes, see how many customers are going in, look at the foot traffic. That's just a simple way of getting an idea of how important that company really is to somebody, because that's where you're gonna get a whole deliberation of value on your investment. So it doesn't have to be anything complicated. If you're working, you're already familiar with a particular working environment. Maybe it's a tool that you use in your company, maybe beauty products you use, maybe it's some other product that you use when you shop, or I don't know, anything really. So you have to think about what you already know. Warren Buffett calls this your circle of competence. So just stick in that area, especially when you're beginning. And then as you get better and better, you can branch out and go into all these different sectors and try to get an understanding and just pull all the information together, because that's when you really start outperforming the market. But we'll get into more advanced techniques later on as we go and develop our understanding about the stock market and investing in stocks. So at the basic level, a stock is a contract statement between you and the company that you have bought, or you own a fraction of the company. It's just to take a little basic definition of that one. You should have a certain level of conviction in the company, and that's to prevent you from getting into scenarios where you're forced to sell off because of all the negative conversations around that company. Because the fundamentals might not have changed, but people's perception of a company can change, and that can affect the daily fluctuations in the stock price. Now again, the reason why we invest over long term is that we are putting ourselves in a position where we're not seeing short term and thinking about the price fluctuations on a day-to-day basis or week-to-week basis. We're actually thinking months, years into the future to limit the psychological effects that the stock market can have on people. Focus on you and your own strategy. That's an important one, really. Again, you want to block out all the noise from other people. You can take feedback from people, because that information is just as important as anything you can find about a company. Now, if you see something changing in the company, like, oh, I saw the decline in Fitbit, so Apple took over a large market share of Fitbits, so my perception about Fitbit had then changed. Now, I found issues when buying one Fitbit and buying another one, the compatibility between the chargers as a simple one, that did leave a negative, and I often ended up having to buy new straps and new, so I just felt like the quality wasn't there, and I'd just get better quality from other products. And I'm sure other people found the same, so you can look into the reviews as well about those companies. I mean, you ask your friends their opinion about Starbucks, I'm sure most people would have positive feedback. So that's already a good sign for Starbucks delivering quality to customers, and in turn quality to shareholders like yourself. Investing, again, we're focused on the long term, not the short term. We don't care about that. So we're looking for exponential growth over time. Okay, look at these companies that can deliver you some kind of value into the future. We're not short-term thinkers, we're long-term thinkers. I've already spoken about this one. The time in the market, very, very important. When I first started investing and I chose my first stock, I just saw more and more growth over time. It wasn't as simple as that, because you'd see the fluctuations happen, and because you've already convinced yourself, or you should have convinced yourself enough that, based on the information you had available, is that you're picking something that's quality. So all the negative noise from outside shouldn't really impact you in that way, and you're looking to, over time, increase the returns on your capital investment, is the whole reason about picking quality stocks. So if we think about the amount of risk we expose ourselves to when we're working in a single job, we usually pin the job on some hope that we're going to be getting paid more and more over time. Now, during the pandemic, we saw a dramatic shift in how some of that worked, because I'm sure some companies had to cut back and possibly reduce salary, or even if you've been promoted to a new role, they probably told you, hey, we can't afford to pay you that additional money, so we're going to hold off until the next time around where we can afford to do that. So if you think about that, and you think about the difference between choosing an investment for yourself as opposed to being in a situation where someone else's decisions impacts yours more than you would like, right? So if you can draw from that, you can take the situations on the importance how we expose ourselves to risk in job promotions and job salary increases. We're aiming to do a similar thing with our investments, where we're expecting this thing to rise more and more over time, but only true if you pick quality investments. Even though you might not notice it, when you're doing investing, you have a lot more control than you might actually think. Because if we take it back to the example of Starbucks, if you're someone who goes in for coffee every week in Starbucks and you notice the quality of their products are declining, you're going to start thinking in your head, hey, I'm an investor in this company and I don't feel like they're delivering quality for me. So what about other people? So you then start asking your friends or family about their opinions on Starbucks quality coffees. And if they all have a negative feedback to say about the company, then you already know, hey, maybe the fundamentals have changed. Maybe this isn't the company I want to own anymore. So you can see these trends happening over time. It just doesn't happen overnight, which is why we don't bother about the price fluctuations on a day-to-day basis. Something should change in order for you to change your mind about a company, and that's exactly what we're trying to get at. Okay, so extracting all of this, I'll show you some more practical ways we can actually find out about companies and whether we're picking something that's of quality or not. So there are many tools that you can use, but as a quick first tool that I do reference people to, other than using their own platforms to get information, you can go to a trusted one like Yahoo Finance. That's one of my personal favorites that I use on a daily basis or on a fairly regular basis.